Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending February 3rd, 2023. Let's get into stocks. We got a long one for you today. Equities were mostly up across the global market indices, with the U.S. Benchmark S&P 500 rising 1.64%. The Russell 2000 gained 3.9 and the NASDAQ was up 3.33. In international developed markets, which is the EFA, was up 0.46. But the Dow declined 0.15, while emerging markets also declined 1.18. Within the U.S., communication services and technologies were the best performing sectors, while energy and utilities were the laggards. Now, the mid and small cap stocks outperform large stocks. We see this right now a lot too, with the NASDAQ really gaining some steam. It's been up considerably over the Dow and the S&P in the last couple of weeks. So let's talk about the Federal Reserve. They raised federal fund rates by 0.25%. At their monthly meeting, which was in line with expectations. It now stands at a 4.5 to 4.75% rate. In his commentary, the Fed Chairman Powell appeared more open to limiting rate hikes, which stands in contrast to his more hawkish remarks in the past few months. So it gave hope for stabilizing rates along with both stock and bond prices. The job report in their week undid their optimism, and a two-year Treasury yield rose 11 basis points to 4.3%, and the 10-year yield ended the week 1 basis point higher to 3.53. Now, both the European Central Banks and the Bank of England also raised rates last week by 0.5% each. Get into commodities. Oil prices declined after inventories expanded faster than expected and concerns arose over Chinese demand. The price of West Texas crude declined 7.89% to close the week at $73.39 per barrel. Economic data. Announced job layoffs surged 136% in January versus December and increased 440% on a year-over-year basis, the highest January since 2009. The industry with the highest month layoff announcements was technology, which accounts for over 40% of the cuts. Also, total announced hiring plans declined 36.6% on a month-over-month basis and dropped 57.8% year-over-year. Hiring plans in the month of January were led by entertainment industry and leisure, driven by aircraft. Factory orders rose 1.8% December, below the consensus estimates for a 2.2% increase, and core capital goods, which is non-defense ex-aircraft, fell slightly following a similar decline in November that together offset October's 0.3% gain. Also, a key manufacturing index dropped to 47.4% last month from 48.4% in December, the third straight month contraction. Now, these results underscore weakness in the business investment and business confidence. On Friday, it was announced that employment surged in January with net new jobs up 517,000, which was nearly triple the consensus estimate. In addition, December count was revised upward significantly, and both months were driven by private companies, particularly on the service side. With this report, the unemployment rate now edged down to 3.4%, better than the estimate of 3.6%. At the same time that the Federal Reserve is focused on bringing down demand for labor and wage price inflation. Let's get into company news. Advanced Micro Device, which is AMD, everybody knows it as AMD on the computer, is a core select in G33 holding for Gradient, rose 14.18% after management of the semiconductor manufacturer reported quarterly results and their outlook, which was ahead of expectations. Strength in the data center orders, which is the largest source of revenue, are expected to overcome weakness on the personal computer side. Let's look at Meta, which was Facebook, right? A core select and contrarian choice and G33 holding rose 22.93% last week after management reported quarterly results that were in line with expectations. However, investors were enthused by the board's new focus on cost reductions and capital spending efficiency as they continue growing their business. Synteta Technologies holding, which is a core select and G33 holding, rose 13.89% after the sensor and controls company reported a quarterly revenue and earnings that beat expectations, and management also gave guidance that was in line with expectations. That's it. That includes this week's market commentary. Thank you so much for being part of our ARA family. If you'd like to call us, of course, 855-756-5700. Visit our website, scan the QR code to get our newsletter, share it with a friend. And make sure we're very thankful for you being part of our family and for the introductions that you're giving us and referrals. So thank you. God bless you. We look forward to seeing you again next week.